How to understand ICO regulation in the cryptocurrency market. The regulation of initial coin offerings, ICOs, in the cryptocurrency market has been a significant and constantly evolving topic in recent years. Here's a comprehensive overview. What is an ICO? An ICO is a fundraising method in which an early-stage company issues digital tokens in exchange for cryptocurrencies. These tokens can represent a stake in the company, access to a product or service, or simply have speculative value. Devaluation risk. Regulatory uncertainty could lead to the devaluation of cryptocurrencies as investors may become more cautious and choose to sell or avoid investing in assets that are subject to significant regulatory risks. ICO risks. Before regulation, ICOs were associated with several risks, including fraud, lack of transparency, money laundering, and high-risk investments. Regulation by jurisdiction. Regulatory approaches vary significantly from country to country. Some countries have banned ICOs completely, while others have taken a more permissive approach with clear rules to protect investors. USA. In the United States, the Securities and Exchange Commission, SEC, has begun to consider many ICOs as securities, subject to securities laws. This means that companies conducting ICOs need to comply with applicable regulations or face legal penalties. European Union. In the European Union, the regulation of ICOs varies from country to country. Some countries have adopted a more rigorous approach, while others are more open to innovation. The European Commission has sought to coordinate a more consistent approach across the EU. Asia. Asia has been a fertile ground for ICOs, especially in China and South Korea. However, both countries have imposed significant bans or restrictions on ICOs due to security concerns and excessive speculation. Switzerland. Switzerland has emerged as an important hub for ICOs due to its favorable regulatory environment. The country has introduced clear guidelines on how ICOs should be conducted, aiming to balance innovation and investor protection. Future trends. Regulation of ICOs is expected to continue to evolve as governments seek to balance innovation and growth of the cryptocurrency market with investor protection. Clearer regulations can bring greater legitimacy and trust to the ICO market, helping to drive the adoption and sustainable development of cryptocurrencies. ICO regulation is constantly changing and varies widely by jurisdiction. The regulatory approach could significantly affect the cryptocurrency investment environment, influencing both entrepreneurs and investors. Thank you, guys.